This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all.
Alright, hello and welcome to Camel Finance. I'm your boy Camel, and look, I'm not saying it's cycles, okay? But it's cycles, okay? Don't make me tap the sign again. As ever, people can choose to disregard this information or not. But today what I largely want to talk about, okay, is a few tabs that I think represent my little echo chamber on Twitter, right? I think a lot of people have kind of gotten where we are in this major cycle wrong, to be frank. And of course, anyone can be wrong. It's not really the point of this. What actually matters is staying on the right side of the trade. But I believe what I can see at the moment is a very compelling case for how the majority of the market are observing something that doesn't really exist, okay? So that's kind of what I want to point at today. Then I'm going to spend a little bit of time looking at TA and charts and see if I can find some new setups to get behind, because I think there's a few viable dips in the not too distant future. If this is going to be a 5-year cycle, which is one of these newer ideas that has just kind of shown up, a major bear market low needs to occur at the end of 2027 instead of 2026. That means the next couple of weekly cycles ought to right translate and produce higher lows too. Now, very few people actually understand that. I suspect most of the people watching this channel understand this because the Camel Crew knows about cycles, but I suspect the majority of market participants do not understand a word I said. Meanwhile, everyone seems to think they have the answers, but hardly anyone even understands this very simple couple of sentences. Now, if you're actually interested in understanding these and you happen not to, then go and watch the tutorial playlist, right? It's all in there. There's plenty of content I've created so that people can go and understand this stuff. And at the same time, you're seeing this whole idea of like liquidity increasing, okay, and the ISM and the business cycle or whatever, and blah, 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 right? Again, it goes back here, doesn't it? Okay, don't make me tap the sign, okay? It doesn't, that's the beauty of cycles. None of these ideas mean anything, okay? It's just the cycles that are in control. Everything else is just narrative. And one of these narratives is that this is the real cause of the 4-year cycle. Huge burst of liquidity. I don't really believe that either, to be completely honest with you. And they're saying, guess what happens in 2026? And then you scroll down and he's basically saying, well, that's because we're probably going to get rate cuts and easing and printing and blah, blah, blah. But this already looks topped. His own chart looks like it's topped, okay? And where did it top? Right at the end of the bull phase of the 4-year cycle, where you'd kind of expect for it to top. Now, of course, nothing is to say that this couldn't increase. Maybe it will. But even if it does, that doesn't necessarily mean we can't have a bear market, because this old global liquidity chart shows that liquidity was increasing the entire time through the GFC. Okay, and we still had a massive 60% bear market top to bottom for the stock market. So even if this does turn up, it doesn't necessarily correlate to a big rip-roaring bull market, okay? And again, it goes back here, doesn't it? Like, don't make me tap the sign. If it was as simple as liquidity goes up, everything goes to the moon, then we wouldn't need cycles, right? But the power of cycles is that we get to say everything else is narrative. We know the cycles are down. They're starting to turn down. We know we've got to start to head for some major cycle lows. So liquidity going up, down, left, right, or in circles really don't mean anything. Now again, feel free to disregard this, although the data is not on your side. Liquidity calculated as rate of change is loosely correlated with ISM, but it only tends to be dislocated during recessions. Well, guess what? We're probably going to head for a recession pretty soon, okay? Like, again, the writing is on the walls. And again, you don't have to believe that. It doesn't matter. But notice how the recession callers were pointing to a recession showing up. We've got plenty of indicators showing that we're moving in that direction. That trend is unchanged. Meanwhile, everyone else that was not calling for a recession is scrambling to find new ideas, right? The 5-year cycle, what's the business cycle? It's global liquidity. These people weren't saying that. That wasn't their base case years ago, right? They've had to go and readjust because their base case has been proven wrong. Look at what is happening around us, okay? We can just take a step back, take all the emotions out. None of this is personal, right? We just observe what we're seeing objectively. And what we're seeing is, apparently we should be knowing if this 4-year cycle is broken very soon. But look how he's measuring the cycle, okay? High to high, high to high, high to high. And now what he's saying is, we would confirm there's no more 4-year cycle when the 4-year cycle is broken if we have just a little bit more time without a serious correction. I mean, this is categorically false. And again, it goes back to this slide right here, doesn't it? Everyone thinks they've got the answers, but no one even understands the very basic principles. Okay, now, why is this so important to us? Because I believe we can use this to gain a massive advantage over the average market participant, right? The way I'm seeing this is the market is scrambling to explain away what's going on. At the moment, they are scrambling to find a narrative to explain away the price action because they simply don't understand what they are looking at. They just haven't got the available knowledge for some reason, right? Whether they think they've got the answers, whether they just haven't come across cycle theory, it's kind of irrelevant, right? But it's not really up for debate. When you're measuring cycles high to high, you're flying a flag to say you don't know what you're measuring, right? You're just incorrectly doing it. And again, it's not personal, it's just business, right? This is the incorrect application, because if we do overrun here without a serious correction, people like this, and it's not just Dave, right? There's many, many people like this. They will conclude the 4-year cycle's broken. They will conclude that it's an extended cycle, it's a 5-year cycle. But what they don't realize is it's not, okay? It's simply slightly more right translated than what we're used to seeing. And then it will still have to head down for that 4-year cycle low, which of course will be static, measured low to low. The spacing is going to be the same as every other low to low measurement, okay? So I think it's quite strange at the moment that so many people have gotten so much confidence when they don't even have a system. Like, nobody has back tested this, have they? You know what I mean? Like, I don't know. I'm finding this very strange. I keep scratching my head. I'm like, how have they got so much confidence when they clearly don't know what they're doing? And at the same time, I think I can build this case even harder here, okay? Because I'm no Elliott wave guy, but everywhere I look, I see a bunch of wave 4s. Either lesser degree, like this one right here, okay? So this is 3 into 4. We're in the middle of the wave 4 before a bigger wave 3 into 4. Or the other thing I see, if it's not lesser degree, is at this primary degree. And therefore, we're in the middle of this major 3 to 4 before the one final move into the 5th, okay? So everywhere I look, I'm seeing wave 4s. All of them seem to be in the process of completing soon before one final push into the end of the year. Now, again, could this spill into early Q1? Yeah, for sure, right? Like, I'm not discounting that. I've never discounted that. As people that have been following me for a long time will attest. It's never really been a base case expectation of mine, but again, because we understand cycles, it's not beyond the realm of expectation that the cycle could right translate into January, okay, and then just have an 11-month decline into the cycle low instead of a 12-month decline in the cycle low, right? But again, everywhere I look, the charts look something like this. We're in the middle of 4, the final push is coming to the 5th, and then we're going to either have a much larger degree wave 4 correction, or that is the 5th of the 5th, and we're going to have to reset the entire cycle. So what does that tell us, right? It tells us we've got this final push into the end of the year, maybe Q1, and then we're going to be having a long and drawn out correction into late 2026. What does that tell you as well? It fits perfectly with the cycle expectations. We know these major lows are due, not just for Bitcoin, but for the S&P 500, for gold. We're expecting to see all of this stuff bottom roughly at the same time late next year. It also aligns with seeing the continuation of rate cuts being slashed and eventually get into outright QE and Fed balance sheet expansion late 26. That fits with the macro idea. But here's the other thing, right? To say that global liquidity is going to keep going up, as we've already kind of touched on, right? Number one, it doesn't matter if it does because the markets can still trend down, as I showed you earlier. But number two, they don't normally return to outright QE and Fed balance sheet expansion with the stock market, gold and Bitcoin all at or very close to all-time highs. That's not how it's ever worked, right? They just don't do that. What they do is they orchestrate a boom and bust cycle, okay? We have big bear markets, everything crashes, they slash the rates near zero or at zero, okay? And then they unload the printer. Then they unleash the helicopter money at the bottom to stop everything actually going to zero. But for some reason, again, everyone's talking about these weird cycles that don't exist. They're measuring things incorrectly. They're saying things like, wow, their printer's coming, mate. And, you know, rate cuts are just around the corner. Yeah, but those rate cuts, as we've shown hundreds of times on this channel, are more likely to be cuts into a slowdown and a recession than they are to be bullish for the markets. So again, do you really think we're going to get to late 2026 and see some QE without first having everything coming tumbling down? Do you really think they're not going to try and slash the rates towards zero first so that QE can actually be effective? Mostly because, remember, the primary way that they expand the balance sheet is to print this money and buy bonds with it. What else do we know is happening right now as we speak? Okay, bonds are forming their major cyclical lows. Bonds have probably already found their major cyclical lows ahead of these major tops coming in for risk. Okay, so the great rotation trade is set up here. And then the only kind of counter to this argument is, yeah, well, we're not going to have a recession. It's a 5-year cycle. ISM's turning up. Liquidity is going to improve, right? None of that's really true. Okay, and for a long time, I've been talking about how we will see this labour market deterioration keep getting worse and worse and worse, and eventually it's going to be full bore recessionary. The Fed is always late to react because this data lags. I've also been putting the tinfoil hat on and suggesting, okay, that things are worse under the hood than they're letting on because of all the quiet revisions they've been doing to the data, particularly in the labour market. And maybe you're just not paranoid enough, maybe I'm too paranoid, okay? But now look what we've got right here. The Fed has just lost access to private jobs data ahead of the government shutdown. Okay, the Federal Reserve's officials, already cut off from the US economic stats due to the government shutdown, no longer receive employment data from ADP, the dataset covering 20% of private workers and usually available with a 1-week delay, had been a key gauge of this job market. ADP stopped sharing the data after the Fed governor speech highlighted the Fed's use of weekly payroll information. So here's what's actually happened, right? They are now making rate decisions, allegedly, without seeing 20% of the employment data. Now, if you do not smell a rat here, okay, I don't know what to tell you. Like, do you actually think this is an open, honest mistake? Do you actually think this doesn't matter? Or do you think they're cooking the books here to try to just hold off on this recession announcement, to try to make it look like things aren't so bad, just as the maximum amount of market participants buy into a 5-year extended cycle, ISM turning up, liquidity's coming, we don't need a crash for QE, right? We're just going to print them with everything at all-time highs. And when I say everything, I mean everything, okay? Gold, stocks, Bitcoin, commodities are starting to boom now as well. Do you really think they're just going to go, oh, I know what we need with everything at all-time highs? Like 20 trillion a QE. What are you talking about, bro? The Fed is flying blind, if you believe this. Or if you're on my side of this kind of fence, what you're actually seeing is a controlled demolition and they're hiding the data from you. They're hiding the truth from you, okay? They are trying to pretend like they've got some good and justified reason for why they can't let you have the jobs data yet and just see how badly recessionary things really are. Take a look at the stock market blowing off. Have a look at gold, okay? Feast your eyes on crypto sat just below all-time highs. That's what's really important to us, isn't it? At this point, okay, this is so weird, this is so abnormal, that the S&P 500 is about to trade purely on vibes. And honestly, I think it's been trading purely on vibes for a while. This is so abnormal. This makes absolutely no sense at all. Every one of these pullbacks gets smaller and smaller. We finally got a quote, big, decent pullback here of, you guessed it, 3.08%, right? Like, what is happening here? This is absolute grand finale, final late stage cycle behavior. And you've got to think, as a recap, this is happening all at a time when they are lying about the recessionary data. We're probably already in recession. Even if you believe them to be open, honest people, okay, they are clearly incompetent. They're using lagging data, which they've just lost 20% of, to determine the rate policy, which is overly restrictive because they're worried about inflation, allegedly, even though inflation's been at target for a long time if they didn't use that silly shelter metric and substituted it with something like ALNRI, which is real time, which has been deflationary for over a year and a half. This is the situation we're at. And I know the stock market is not the economy. I know that, okay? But generally speaking, one leads the other, as I'm sure you're probably well aware. So the big question to you is, are you just going to disregard everything happening right in front of your eyes? Or are you going to at least be a little bit cautious as we proceed into the end of this year? Are you at least going to be open to seeing some weakness into 2026, and potentially by the time we get to the middle of 2026, real deflation starting to set in with actual liquidity shocks to the system, a probable yen carry trade unwind amongst some other currency problems? Or are you just going to hide your head in the sand and say, none of this matters, the Fed's in control, the Fed's definitely not doing anything suspicious, this rally is early stages in a bull cycle, right? I mean, don't worry about it going back 43 years to the big range breakout of 82, right? Don't worry about the fact that this is where this 43-year secular bull market has started from. Don't worry about that, right? We are early. This is the roaring 20s. We're going up only for the foreseeable future. Don't worry about the fact central banks have been accumulating record quantities of gold quietly, right? Don't worry about that. Like, they're not doing that because they've got a plan for it. Right? They're not doing that because they need to position themselves for the new financial monetary system with a gold reval and a gold-backed digital component, right? Don't worry about that. We don't need to concern ourselves with this happening right here. Don't worry about the fact that the most consistent 4-year cycle we've ever observed, Bitcoin, has used up almost all of its bull phase of this 4-year cycle and at best has one left translated weekly cycle of upside ahead. In the worst case scenario, the top's already in, that forms a lower high and it rolls over. Don't worry about that because alt season's round the corner, guys, right? So it's entirely up to you, okay? Again, as always, I'm just doing me. I'm just calling it how I see it. How I see it is I am hopeful we get this yellow squiggle for Bitcoin. And in the worst case scenario, we get this instead, okay? And then we have to cut the position earlier. And we would have missed the top by a bit, but we're always going to miss the top by a bit. It's not the end of the world, I don't think. For gold, just about clinging on to my support line. We'll see what happens there. Same is true of silver, okay? Just above. We did actually start to take some profit in the members section yesterday, so started to nail down some gains in some of the miners. And the stocks may or may not have forced a weekly cycle low and a daily cycle low in a single daily candle. Again, it would just speak to being really blow off toppy, right? If all we can get is a 3% decline here. If you think that's normal, there is really no hope for you. There's a lot of study and understanding for you to attain before you can come to the realization of just how shite crazy this current moment is. With a bit of luck, we'll get a very high probability trade set up to get behind either a double bottom or a slight lower low, okay? And then I'll be happy to add there. And if this market's just going to keep being a blow off top, then it should just break out and go from here, in which case, fine. We'll keep pushing it until it becomes unreasonable to do so. Meanwhile, again, tell that to the bond market, right? Tell that to the bond market. Doesn't matter what anyone thinks. Tell it to the bond market. If you know, you know. If you don't know, start tuning in more often. If we're really, really lucky here, we could get a Dixie fake breakdown into a inverted 3-year cycle low, and then we can start that deflationary Dixie bid if we're really lucky. Okay, if not, the bottom's already in. That was the inversion, and we're going to go deflationary much more like this, I would suggest. So, you know, we're on borrowed time here, okay? Again, we can still be hopeful, and it's definitely a little bit premature to go calling anything before we've seen that weekly cycle low in Bitcoin. It's definitely a bit premature, okay, to make any decisions before we've seen the weekly cycle confirmed in the stock market. But we are just days away from each now. I think we enter the window for Bitcoin officially in 2 more candles, okay? We'll be inside the 60-day window to find a low. For the stock market, we are inside the window right now as we speak. And there's only 3 scenarios, right? The breakout, the double bottom, or the slight lower low. And 2 of those are tradable, the double bottom and the lower low. And you could even trade the breakout. It's just not really my style. I don't really like to do it. But there would be nothing wrong with that. Either way, again, days away from getting an answer here. And then gold, once this thing is finished eking out a correction, it should be time to probably readjust these trend lines and maybe even add here. I don't know, unless that really is the top, but I'm kind of thinking we'll get an answer pretty soon, because if it is just a sharp correction that's over in a few days, that would speak to this being very blow off toppy, okay? And if it really is the top, then it will just trade sideways for a very long time, okay? So we should get an answer pretty soon. If this thing is at new highs within about 7 more sessions, then we can say blow off top, okay? We'll keep probably pushing the buy button until our fingers bleed, even though it doesn't feel good to do so up here. And if instead we kind of get a bunch of this, right, then we'll know for sure that was fully the top, and we can't really expect any decent upside from gold for quite a while since that major 4-year cycle low is in focus. So overall, I hope you can kind of consider what I've said. By all means, do you, right? You do you, I'll do me. And it doesn't really matter who's right and who's wrong. It's not about that at all. It's just about staying long until it becomes unreasonable to do so. Right now, I maintain it's still reasonable to be long, but you can probably also tell by my approach at the moment that we are definitely on borrowed time here, right? It seems like impossible to me based on the cycles that we're just going to continue to run well into 2026. But by all means, bet on that if you want to, okay? And of course, as always, I reserve the right to get there next year and having not seen any kind of breakdown still be long and strong, right? I'll be completely stunned. I'll be scratching my head the whole way. Like, no way I'm still long here, right? But we don't just sell without confirmed breakdowns and trend changes. And right now we don't have that. So we'll be long and strong until we get that. But particularly with the Elliott wave count, the cycles, and now like all of this absolute craziness from the Fed. And like, I mean, this is just a criminal cartel organization, right? That's what this is. Anyway, I'll leave it up to you. Okay. I hope you enjoyed this. Be back tomorrow as always. And until next time, all the best from me. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game. He's a badass, oh yes indeed. Camel